Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, everyone. Thanks for tuning into this week's episode of the Security Token Show. We're coming to you from our studio here in sunny Miami, Florida. I'm your host, Kyle Sonlin, and joined by my co-host and business partner, Herwig Konings.
Pleasure to be here.
And so before we get started with the show today, I would like to share a word from our sponsor. The episode of the Security Token Show you're listening to right now is brought to you by this week's sponsor, Relio. Relio is a security token issuance platform focused on disrupting capital markets by tokenizing real estate, equities, and venture capital using blockchain technology. The firm successfully closed its $4 million security token sale, which powers the RST security token, which is now trading on Uniswap and live prices on security token market. Relio is working with top-tier clients, including a multi-$100 million fund and prominent real estate property in New York City. The firm's cross-chain mainnet is set to go live next quarter, and with its new funding round complete, Relio is poised to take advantage of the explosive potential of the security token industry moving forward. If you're interested in learning more about Relio's technology or the platform itself, check out relio.fund to learn more.
Yeah, as always, thank you to our sponsor for making this show possible. And thank you to our returning listeners and viewers for tuning in. And for those of you who are new, you should know that we're going to start the show off with our Companies of the Week segment. That's where Kyle and I, we each pick a company that we thought last week made the biggest moves in the space. Then we're going to jump into our top five things that you need to know right now that's happening in the security token industry. We're going to follow that on with some news, as well as some updates on the security token front in the secondary market from Kyle here. And then finally, we're going to dive into our main topic discussion, which today is all about the U.S. fundraising laws that you need to know for security token issuance. So I think we got a great and exciting show lined up today. Kyle, why don't we jump into it? Who is your company of the week for episode 95?
Episode 95, very exciting. And my company of the week is yet another Miami company that's now making moves. As we know, we're here in Miami. It's become the crypto capital of the world. And this company is doing nothing but that. We're talking about BPN Capital Group. And they're a real estate firm that announced the first ever blockchain-based commercial mortgage located at the SLS Lux in Brickell in downtown Miami. This is very exciting news. They're tokenizing a real estate property in the heart of the business district of Miami, Florida. And this is just absolutely tremendous. As they say in the press release, we're restoring control to accredited investors and family offices over their assets. This also circumvents the hoops that they'd have to jump through to invest in commercial mortgages on the secondary market. They're going to be conducting a Reg D 506C offering to accredited investors. We're going to dive into more of those details later in the main topic. And they specifically were highlighting fractional ownership and trading. So this is just really exciting. Another real estate property, a marquee deal, and a really successful building. It's
super great deal. I mean, we saw just the other episode ago, I chose Nolan Reynolds International for tokenizing a $240 million deal. A little south of Miami and Coral Gables, and now right here in an intimate area, the SLS Lux. Kyle, I know it quite well. Now getting tokenized as well. This really is the crypto capital. I'm loving every bit of it. Great choice, Kyle.
Exciting stuff, and it's a commercial mortgage. So this is kind of a new concept. We're going to have to see how they structure this and how it plays out and how it's able to be valued. We're certainly, I think, going to have to do a main topic breaking this down in the future.
Sounds like it, and we're looking forward to those details later in your segment.
And so tell me, Herwig, who's your company of the week?
I'm happy to share my company of the week is actually a Houston, Texas-based company called One Transfer. And they are not only my company of the week, and they're new to the space, actually just getting started as of now, right now. But the reason that they are my company of the week is they've managed to assemble a super squad of 7 different companies in the industry to work together and form what they are calling the first transfer agent for the digital world. And so we've actually got eToro, which in fact, James Rowe, who's one of the managing partners at eToro, he's actually going to be currently the interim CEO of One Transfer. And we've also got Oasis Pro Markets. That's an ATS here in the US. It's been approved and launching very soon. We have got ShareNet, We have got Polymath, another issuance platform, OTC Digital, a trading desk, Merge, the international marketplace and exchange for security tokens. And then we've got Digital, which is a sponsor advisor and a market placement agent within the industry. So we've got a huge team here, an all-star team working together, trying to develop, I guess, under one brand, one transfer, which is meant to be a universal solution, a digital transfer agent to support, obviously, security tokens and digital securities. Not much news other than, who's involved in a partnership perspective. We don't know about any STOs or anything else, but it certainly seems like they're looking for even more partners, and I'm sure we'll get more news from them soon. But in the meantime, definitely want to give them the spotlight for putting the work together and teaming up. I think collaboration is a huge part of what makes this industry possible. And for that reason, congratulations to OneTransfer and everyone involved. You're my company of the week.
That's fascinating. We're kind of starting to blur those lines between decentralized organizations. They have a transfer license, which some of our listeners, you may or may not know, is about managing the cap table of the analog asset when you tokenize it and kind of taking agency over those shares as they move from one investor to another. So this is an important piece of the actual financial management of an asset when you tokenize it. So this is definitely a key piece of the puzzle. We see many other issuance platforms that have raced to get this license that we covered in past episodes. And a lot of these firms you may have heard of before. Certainly eToro has been very active in the space. Oasis Pro, exciting to see that they're getting active on this side of the business as well, because we haven't yet seen them launch. So this clearly is a step in the right direction. It shows that they're active in the space. And then the rest, Merge, Digital Markets, and many of the others are just fantastic. So this is exciting stuff.
That's what makes this SEC approved transfer agent, registered transfer agent, unique, because of all these individual players and different parts of the ecosystem that seem to be involved under this one roof. So
we'll be sure to get you more info on that one as more comes out.
Now with that, let's get into our next segment, the top 5. Let's get into some more news.
So moving into article number 1 of our top 5 segment, we're digging into the CTX Security Token Exchange, which has announced that it's coming live. And this is a green infrastructure, equity, real estate, art, Bitcoin, Ethereum, everything you can imagine, digital asset exchange that's going to be coming live. They just received their license approval from the Monetary Authority of Singapore. And that's just really exciting stuff, because not only are they now licensed, but they're powered by NASDAQ's underlying technology. Right. This is an exciting announcement.
It's a big news. Obviously, they're not the first MAS-approved digital exchange, but they are the first, and that's why we think this is the number one news, to be using NASDAQ's technology stack, which is obviously a big deal because they're kind of the big incumbent in the industry, and now they are actually supporting blockchain and other vendors leveraging their technology to do similar exchange and marketplace services, presumably leveraging a lot of different benefits like instant settlements and digitization to leverage, universal identities and customer accounts across their platform. So really exciting. That's actually the Cyberdean Tech Exchange out of Singapore, and they're launching supposedly in the second half of this year here.
Yeah, NASDAQ provides these trading services and powers exchanges for, I think, over 70 different platforms. But to my knowledge, this is the first one that's going to be specifically focused on digital assets, security tokens. They're going to be using blockchain technology here. And a little bit of background, the co-founder of the CTX exchange, Dr. Bai Bao, is also the chairman of the Asia Green Fund that has $2 billion in assets under management. They've directly invested in CTX, I think to the tune of $15 million. And so presumably there's going to be some assets coming in from that side as well. This looks like it's a packed deal and a lot of exciting stuff that's going to be coming out yet again from Singapore around the world.
One would hope, and as we said, can expect that probably sometime this second half of the year. So we'll be looking out for that. Now let's get into number 2 here. We got Vertalo, issuance platform in the United States, also registered with the SEC as a transfer agent, officially announcing its first round of funding, $5 million, Kyle, $5 million from Coinbase, from Tezos, from Wedbush Capital, and many others. So congratulations there, Vertalo. That's a big move, $5 million in the bank to help them scale and grow. I think it's a very timely investment, given that the blockchain space and the security token industry is sort of seeing and growing into its next evolution here. So congratulations to David Hendricks and the entire Vertalo team. They claim to have done $1.5 million in revenue in the first quarter of this year alone. So that's not too bad if they can close $6 million in revenue for the year.
Yeah, I know they were working. They were working with their real estate division that had been successful. They had spun that up, and that was kind of had its own book of business that was successful. And Vertalo's been in the space for a while. We've known them and their team for quite a few years now. So very, very exciting to see them close around and be flush with capital to take 2021 by storm.
Yeah, they've been actually in the space for 4 years and counting now. And out of Austin, Texas, another Texas company.
And moving into number 3, we've got Poloniex. Poloniex is a cryptocurrency exchange. They haven't really acted very much in the security token space, but that did not stop Canadian regulators from saying that they were in fact selling securities and derivative products that were not sanctioned by the government there. Supposedly, despite approving their crypto ETF in the Canadian Stock Exchange, the government said, no, Poloniex, you cannot be trading the different products that you are. In fact, you need to stop immediately. You need to pay $1 million in Canadian dollars in fines for each individual infraction. And you need to remove services from working with any Canadian citizen on the exchange.
Big deal. So that's specifically the Ontario Securities Commission. So Canada is split up into a number of different jurisdictions, but that could mean that other jurisdictions are going to follow suit. And very interestingly enough, they mentioned that, of course, it's because they were selling securities without a prospectus and without registration. So it'll be interesting to see which potential, tokens were considered securities and which ones they're going to get an infraction for, as Kyle mentioned, up to potentially $1 million. And of course, what does this mean potentially for other crypto exchanges operating in the jurisdiction in Canada specifically and potentially offering the same tokens for sale? So this could be the start of something big in crypto land in Canada.
You're absolutely right. Important to remember that this exchange is not based in Canada at all. They're based in the Seychelles. They were just servicing clients who may be in Canada, and that's where the infraction occurred. So just because you're overseas, just because you're not in a specific jurisdiction, doesn't mean the regulators aren't going to come after you if you're not playing by the rules.
That's right. Number 4, FedCoin. So that's right. The Fed, of course, the U.S. Fed, has actually come out and said that they are going to be publishing this summer a research paper on central bank digital currencies. In fact, they mentioned that research has already been underway. So we know that the Fed is exploring distributed ledger systems, blockchain, potentially many of the other 40, 50 plus banks around the world that are already exploring central bank digital currencies. And what they're going to be looking into specifically is actually concerns around, of course, privacy, because there's a lot of questions that come up about being able to track how you spend your money digitally. And there were actually also concerns around financial stability, of course, given that crypto assets are so volatile. How does this work for stable coins and fiat money such as a Fed coin? So they'll be examining all this in the research paper and more. They're basically bringing the concept of CBDCs into the spotlight, into the public eye here in the United States, which I think is definitely, it's a hot topic. I think it's going to be potentially even a polarizing topic. A lot of people are going to have things to say, whether it be from working groups to associations to universities to industry players and banks and commerce players and more. The Fed coin is a big, big deal, isn't it, Kyle?
Absolutely. And Jay Powell, said, and he came out and declared that the main concern is if the Fed can actually improve the current monetary system. And he did note specifically that cash is not going to be replaced here. They're trying to use both in complementary fashion. So how can they use both cash and a central bank digital currency for that wealth management? And the pieces here, he talks about privacy, he talks about transparency, a lot of these pieces that have become central discussions around central bank digital currencies that have been very relevant today. So it's going to be fascinating to see. You have to think that this timeline may have been sped up by the fact that China has been rolling out a central bank digital currency, and many other countries around the world have been really deeply exploring this and potentially nearing launch, that the U.S. doesn't want to fall too far behind.
I don't think that's far possibility there, Kyle. I think that's probably absolutely the case. In fact, we have a running list of all central banks exploring a CBDC program of some sorts online at the Security Token Market blog. Actually, you can go check that out and learn about the individual programs. And of course, we'll keep you updated here on the show and there on the Fed coin, a U.S. digital dollar issued and sponsored by the Federal Reserve.
And moving into article number 5, we've got HSBC, one of the largest banks in the world, says no to BTC. citing volatility and how they are not going to be promoting this to their clients through wealth management and advisory. This is fascinating, but not surprising, especially considering the recent dip in price. That being said, they did say that they will facilitate customer demand. So if customers want it, they still can get access. It's just not going to be actively promoted.
That's right. They also mentioned that they'd also support central bank digital currencies when those come around. So that's certainly very interesting. But that's right. They said no to Bitcoin. They said no to cryptocurrencies. And they said no to stable coins too, citing similar issues. That's all they mentioned to say about stable coins as well. So maybe consumer demand, like you said, will change things over at HSBC. But given that they are one of Asia's and one of the world's biggest banks, it is still a pretty big deal when they come out and say, no, this is not something we're interested, not from a crypto trading desk perspective, not from a custody support perspective. So, of course, we'll see when, inevitably, I think, they'll change their tune.
Yeah, there's also the Chinese factor of how China has banned Bitcoin mining and put a lot of restrictions on this stuff. There may be some outside pressures coming from that. Only time will tell.
Hasn't stopped HSBC from being very active in the security token space, though, as we know that they've been exploring bond technology and issuances for quite some time now. So.
Absolutely. So that's our top 5 news stories of the day. Comment below, let us know what you think, and let's move right into Herwig's industry news segment.
Let's do it. Starting off our news segment this week is a big acquisition by Blockstream, acquiring Adamant Capital, which will launch a new finance division. And this division will focus on the Bitcoin investment products built on the Liquid sidechain. Blockstream highlighted its recently launched Blockstream Mining Note, BMN, which is a liquid-based security token that is designed to give investors exposure to Bitcoin mining as an example of the types of financial products it wants to provide through this new division. And Kyle will let you know about this upcoming Blockstream STO updates in his upcoming segment on the show just in a short second here. And meanwhile, Liquify in Hong Kong launched Liquify Labs to cultivate future blockchain technology and infrastructure, starting off with a focus on decentralized finance, or DeFi as we all know it. And Liquify Labs provides dedicated resources to DeFi projects that are being incubated in its program. So if you're a DeFi programmer, if you're working on something cool out there, be sure to apply. And over in Europe, we saw tokenization giant Tokeny. They partnered up with electronic money institution Monerium to boost the accessibility of digital securities by enabling a digital euro to secondary transfers of tokens. So Monerium claims to be the first and only EMI to offer money on blockchains and blockchain bank account numbers. So Tokeny now added this fiat gateway solution with its Billboard platform to allow investors to express their intentions and trade security token pairs with digital euros. I think that's a really great improvement to the digital ecosystem that Tokeny is building out here. And I'm sure investors are looking forward to that as well. And every week it does seem that we've got another node operator announcement from the Polymath team, which is building the Polymesh security token. It's a dedicated blockchain for security tokens, which needs verified node operators like eToro, Tokenize, and Saxon Advisors, and now Script Asset Management AG to validate information. And Script is actually a Swiss investment firm providing solutions for institutions to gain exposure to digital assets through investment products and asset management services. And maybe they will soon be bringing Polymesh-based security tokens to their investor base as well now. And as far as new resources and opinion articles that you should check out, I recommend first checking out CNBC's Riley DeLeon, who wrote an article titled, "Can Cryptocurrencies Survive Regulators?" Here's what Ripple's CEO says about XRP's future, where he extensively, of course, covers the landscape of the battle between the SEC and Ripple, and as the title suggests, features an interview with the CEO of Ripple, Brad Garlinghouse. So he's got to say a lot about this, obviously, and this case may have ramifications for all crypto assets in the US, so it's worth keeping an eye on this one and learning about it via this article if you don't know more. And Rohel Salim on WCCF Tech wrote an article about how GameStop can eviscerate shorts and dramatically boost the profile of its NFT push by buying back shares using a blockchain-based native security token. Mouthful of a title, but it's a superb idea, incredible use case for a security token, and I applaud the idea of a share buyback program via a security token. And up next, if you're a DeFi lover, you'll love this one about traditional finance and DeFi on Cointelegraph, where Ting Peng talks with Adrian Lai, the CEO of Liquify, who I mentioned earlier, and how he sees security tokens merging with NFTs, DeFi, and much more. Always gives me goosebumps reading this type of stuff, and it's just like this one by Dominic Dantes, which is called Security Tokens Could See Rapid Growth in Europe, Outpacing Cryptocurrencies, which I think that sounds promising, very compelling narrative. You see, there's a new study by Plutonio, which is a German-based blockchain consulting firm, which worked in a partnership with the Frankfurt School of Finance and Management, and also a digital custody provider, Tangany, to identify that the market volume for security tokens in Europe is expected to reach almost €1 trillion by 2026, which that is indeed possibly outpacing crypto asset adoption. And of course, that's it for the news, but next week we have the Miami Bitcoin Conference, which will be in full swing, and if you're around the area, please give us a shout so we can try to meet up with you. And finally, we'll also be having our weekly Clubhouse on 5 p.m. Thursdays with guest panels from all over the industry, including CEOs, from issuance platforms, exchanges, issuers themselves, and of course other experts like lawyers and consultants in the space. So where else can you really find a conversation about security tokens so raw? Nowhere, I think. And with that, let's swing over to Kyle to get the latest security token announcements and market activity updates.
Our first piece of news is an upcoming security token coming to T0. The marketplace announced Thursday that it has agreed to digitize $25 million of equity interest in an oil and gas fund managed by Houston-based energy funders. Issued on the Ethereum blockchain, investors are going to be able to buy and sell digitized equity in the energy funders Yield Fund 1, giving them access to the returns from the oil and gas projects in the portfolio. The token is going to begin its fundraise this month, and it will trade after the 12-month lockup period ends. It's exciting to see more deal flow from T0, but don't get too excited about this token trading, as we're likely going to need to wait until the end of 2022 before we're going to see it on secondary markets. Next up is Securitize, who made a huge announcement that they have officially launched their broker-dealer Securitize Capital, and they're kicking it off with 2 cryptocurrency yield funds that are now fundraising on the platform. Securitize Capital's 2 flagship funds are going to be launching in early June, providing investors with direct exposure to Bitcoin or stablecoins, aiming for higher yields than funds currently on the market. The Securitize Capital BTC Yield Fund and the USDC Yield Fund, as they're going to be called, are structured as traditional securities with very low management fees of just 0.5 point and are going to be issued on the Algorand blockchain. Securitize CEO Carlos Domingo explained the deals in more detail, saying, quote, "We see very strong demand from institutional investors for cryptocurrency exposure. They want to go beyond simply holding a cryptocurrency, but rather are seeking access to the yield generated by DeFi strategies." And that's exactly what they're going to be targeting with these 2 funds. You can check out more information on their website at securitize.io. Finally, we close out our security token offering news segment with an announcement about a security token offering from Liberty Real Estate Fund. Led by Michael Flight, an outspoken thought leader and entrepreneur in the space, the firm is launching the very first single-tenant net lease security token. It's powered also by Securitize, and it's live now. It doesn't seem like the terms of the deal are maybe public yet, but it's very exciting. Based on what I can see from the website, it seems like they're focused on commercial real estate properties, and as the name of the fund suggests, it will likely be with single tenants leasing the properties, presumably for storefronts like gas stations, retail locations, and others. I also did see the Wawa logo on their website, and I gotta say, if they're actually gonna tokenize a Wawa, I'm gonna freak out. I'm from Philadelphia and a huge Wawa proponent, so it'd be pretty cool to see one of their locations included in the portfolio. Only time will tell. Moving into our market update segment, we have 2 delistings that are going to be pretty important to cover, both revolving around Securitize offerings from the past. The first comes from Asian exchange Fusang, which announced this week that it has delisted the Spice VC security token. There wasn't any information about why this happened, and to be honest, I actually wasn't aware that the exchange was actually live trading security tokens. I was researching on their website, and their website doesn't show any other security tokens that I could find, so I'm not sure what the status of the platform is moving forward. Either way, they've removed Spice VC from the platform, and hopefully I can follow up with some more information on this story in the coming weeks, as well as any other potential options that they do trade. On that same note, Lottery.com has officially been delisted from Open Finance Network. We covered this a couple weeks ago, and now that INX has begun its acquisition of the IP and licensure of OFN, it appears that Lottery is the first casualty of the takeover. We've covered Lottery's disappointing developments since launch in 2017, and now the token is fully illiquid. We really only ever saw dumping of this asset through OFN, so it's not much of a surprise here, but either way, now it's gone. Now let's move into our secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. The total security token market cap jumped this week nearly 10% thanks to a 13% gain from Overstock, a 5% gain from T0, and a 33% gain from Relio over the time period. Exciting stuff from those three, and great to see Relio with a strong price rebound and very strong trading volumes at around 600,000 this week, putting it in third place right behind T0 and Overstock on that chart. Despite being nearly a 10th of the market cap of T0 and a 30th of the market cap of Overstock, the liquidity ratio here is strong. That also trades on Uniswap, which again shows the power of decentralized exchanges. We've covered that in the past. We also have some great news to share from Security Token Market, which is now fully integrated with Uniswap's Layer 2 trading platform 11Swap, allowing us to get live updating prices for all Uniswap and 11Swap security tokens, including over 90 realty properties. We've covered dozens and dozens of these properties that have successfully fundraised over the last year, and now they're all live. Most of the market caps of these tokens are pretty small, in that same 50 to 70,000 mark, but there are actually about 15 properties in the six-figure range, with our highest market cap at 791,000 from 10700 Whittier Avenue, which is a 16-unit apartment building in Detroit. Most of these properties are still in Detroit, but realty has expanded to New York, Florida, Ohio, Chicago, and more. These prices update daily through our newly developed API, which is very exciting because most of the properties we've had over the last few years have actually been manually updated by the research team at STM. And so I know myself and everyone else on the team is happy to see we won't have to update now over 100 trading tokens by hand. This gives us some exciting stuff and a ton of new information to start using for market research and reports. So definitely stay tuned for some exciting updates in the future that you'll hear here first on the Security Token Show. And with that, we're going to move into our main topic this week. We're talking US regulations that you need to know. Let's get right into it.
For our main topic today, we're going to be getting into the different fundraising exemptions, the different rules that you need to know whether you're an investor or an issuer when you're participating in a security token offering out of the United States.
Yeah, this is really the reality with the fundraising exemption that you choose determines a lot of the different qualities about what kinds of investors you have, about how long they need to wait before they can trade or sell that thing, how much you can raise. There's a lot of different factors here that are really dictated specifically based off of which exemption you choose. So maybe the best way to kick it off, Herwig, is if we just go through the more common exemptions and talk about some of those qualities themselves.
A lot of the time, you'll actually end up paying a lawyer to find out a lot of this information. We are not attorneys, but of course, hopefully this helps you get a leg up on what's going on here and have a more productive and efficient and maybe more cost-effective conversation with your attorney down the line. So like you said, Kyle, let's get right into it. If you're potentially going to be raising funds through a security token offering in the United States, the most common way people have done that in the past is through Regulation D. So the exemptions that we're going to be talking about, actually, Regulation D, Regulation CF for crowdfunding, Regulation A, and Regulation S. All of those are exemptions that were created to allow private companies to raise money from people in the United States and outside without having to register with the SEC. That means that you don't need to file things like K-1s, you don't need to follow certain compliance requirements, you don't need to spend a lot of money in order to be compliant and trade amongst investors. And so the first and most common one, in fact, trillions of dollars a year are raised through the Regulation D exemption, is the one we'll start out with here. And actually, it's worth knowing that it's split up into two different exemptions. Reg D 506B is what actually the traditional, most companies since the 1930s have been using to raise capital. And that is just basically allowing investors to raise, or issuers to raise unlimited amounts of money from accredited investors in the United States. And so long as they follow, some very basic rules like filing with the SEC, how much they're raising, and making sure that investors say that they are qualified to invest. An issuer can raise an unlimited amount of money in the private markets through this Reg D exemption.
Right, so you got Reg D, it's the most common exemption. You've got the Reg D 506B and 506C. 506B is private. You're just going to pull in investors from your network, people that you know, and you're not really trying to go loud and proud with it. This is what everybody used to use, but really there's a significant upgrade to that, and that's Reg D 506C. Reg D 506C essentially just allows you to advertise to anybody. It's really a lot of the same qualities as that traditional one, but now you can advertise to everybody. The only differences here are a couple things in terms of registering your investors. Of course, they need to be accredited. This is a certain level of income threshold and wealth that an investor has, and you need to be an accredited investor here in the US to participate in most private deals. That's kind of part of the gig. You don't need to do a lot of the registration stuff, a lot of all those filings that you mentioned earlier, Herwig, and because of that, we can only have those accredited investors participating in the deal.
All right, if you've never heard of what an accredited investor is, it's actually someone who has $1 million in net worth, not including their primary residence, or someone who earns $200,000 a year or more in income, aka someone who is rich enough to can afford losing their money in investment. That's essentially how the SEC came up with that qualification. And to Kyle's point here, between 506B or Reg D 506B and 506C, the major difference is that with B, you can only bring in through private circles your investors, relationships that you've already had and established. Through 506C, you can actually solicit and advertise your opportunity on TV, over the radio. It doesn't matter who hears it. You are just now liable and need to make sure that your investors are indeed accredited when they participate in that offering, because obviously it's possible you may catch someone who doesn't qualify who wants to participate in the investment.
So the good thing about Reg D is that there's no limits. You can raise as much as you possibly want. This is where you see companies that might be raising, potentially billions of dollars through a private fundraise. It's because Reg D is uncapped. And that's really a unique part that you're going to hear in a couple of these other ones. They have those caps on top, or a ceiling of how much you can raise, which limits the really effectiveness of some of these other exemptions. So with D, you can raise as much as you want. The other con here, or the other reality, is that with Reg D, you have a 12-month lockup period. And this means that if you're investing in a deal that's using a Reg D 506C exemption, you're an accredited investor, you're excited to participate in the next hot startup, you have to wait 12 months before you're actually issued those shares, before you can trade those things. So when we're talking about a security token, one of the huge benefits of a security token is this ability to trade it on a marketplace or an exchange. With Reg D, whether it's 506B or C, it's a 12-month lockup period that you need to wait, and then it's free to trade, and then anyone who buys it on that secondary market doesn't need to wait that month. It's just for that initial fundraising period. I think that's Reg D in a nutshell.
Yeah, let's review real quick. Reg D, the most popular exemption in the United States. 506B, can only use it if you're privately raising money from accredited investors. 506C, you can raise an unlimited amount by publicly advertising your raise, but you're still stuck to accredited investors. And in both scenarios, you're limited to a 12-month lockup period. Let's get into the next one, Reg CF. And in fact, Reg D 506C, Reg CF, and Reg A+, the three ones we're going to go over next, they were all created thanks to a new law in 2012 called the Jobs Act, which was passed unanimously in Congress to enable fundraising online. Security tokens were not even a thought at this time, but it did lay a framework to allow for crowdfunding to grow, and that's where Reg CF, or regulation crowdfunding, comes in. Kyle, you want to explain this one?
Yeah, this is just like a Kickstarter campaign, right? So you can put together, you have to work with a broker. So this is somebody that's a licensed broker that actually is going to be helping you with the crowdfunding campaign. They would be known as a crowdfunding portal. These are firms that specifically help you list your deal, and you're going to go to the public. You're allowed to raise from anybody. They don't need to be accredited. They can be the retail general public who can then put in a little bit of money that they see into your deal because they're getting really excited about it. And this is an exciting offering because you can raise from anybody. It's about building consumer products. It's helping small businesses raise capital. The exciting thing about Reg CF, as we've covered here on the show, is that very recently they expanded the cap. which was really the biggest restriction around Reg CF, was that cap. And before it was only about $1 million, just a hair over $1 million, which is nice, but realistically isn't moving the needle for any company outside of like a really early stage startup. Now, with Reg CF, they've expanded it to $5 million, which is now a legitimate amount of money. That's what Vertalo was able to raise in their Series A, a successful issuance platform here in the space. So there's a lot of companies that are now going to be able to take advantage of this $5 million raise, which they can get from the entire crowd.
So you want to raise money or you want to participate in an investment, but you're a retail or a non-accredited investor, as they call it, well, then you're going to need to leverage something like Reg CF. You can raise up to $5 million from anybody. You just need to register with the SEC, just like with Reg D. And I believe there is no lockup period, or it is dramatically reduced for the Reg CF exemption. So that would be where you need to go if it's very important for you to be able to have retail investors in your crowdfunding campaign. And obviously $5 million is still not that much.
It's per year to raise money.
It is per year, so you can do that on an annual basis. But some companies are really looking for growth capital. And so part of the Jobs Act, they created also an improvement to Reg A called Reg A Plus, where although you can raise more money than $5 million, actually up to 50 or actually up to 75 with a tier 2 version of it, you can raise money from anybody in the United States, but you need to have SEC approval, just like this were a publicly registered listing with a IPO on NASDAQ or on the New York Stock Exchange. And obviously that means more fees, potential waits, and a contingency on the SEC actually approving you. However, it means you can raise more money, probably more than you need, at least with $75 million, from just about anybody in the United States. And of course, you can solicit that and let everybody know. And again, I believe the lockup periods are either none or dramatically reduced from 12 months.
Yeah, Reg A Plus is really the holy grail of fundraising exemptions for private companies, because as Herwig mentioned, you can raise from the crowd. So who doesn't want to get everyone involved, especially when you look at the stock market? Everybody wants to be trading and available to all retail investors. And here in the primary round, the Reg A Plus is certainly that way to do that, up to 75 million. There's, as Herwig mentioned, two different technicalities here, whereas one you can raise up to 50, and then if you do a little bit more compliance and a few other filings, you can raise up to 75. But yeah, you need to submit this to the SEC, and they allow you to raise capital through a Reg A Plus. We've seen this process can be pretty daunting, and it's not necessarily straightforward. However, we have seen the very first Reg A Plus fundraise from a security token from Exodus, which we covered a couple weeks ago, and they were able to raise the full 75 million, which is really exciting and hopefully paves the way for more issuers to do this. But Reg A Plus is an exciting one.
That's right. Just like the raise to 5 million, they increased the cap from 50 to 75 million very, very recently. So actually the first SEC approved Reg A Plus offering to raise $75 million happened to be a security token offering. So the first STO to do a Reg A Plus happens to also be the largest and most successful Reg A Plus offering in history. Hopefully that means we're going to see a heck of a lot more of them and a whole lot more approvals from the SEC on similar offering types.
So those are the US focused fundraising exemptions. But let's say hypothetical, you're a company here in the US and you've raised money from US investors, but you also want to accept international investors. There's got to be an exemption for that too, right?
You're going to want to use Regulation S. So the SEC was designed and created to protect US investors, specific emphasis on the United States. So when it comes to fundraising for a private company with investors outside the United States, the SEC, frankly, doesn't really care as much. So they created the Regulation S exemption to basically allow for international investors to participate in your offering without convoluting any of the United States-based exemptions. And so for that reason, there's a lot less rules, the lockup periods are lower. Basically, the SEC doesn't care what you do. You can raise an unlimited amount from them, just so long as you make sure that none of your US investors fall in under that Regulation S exemption. And so I'm sure a lot of you might be thinking, okay, so how can I do this? Do I have to pick just one? And the answer is no. You can actually use Reg D, Reg CF, Reg S, all in tandem if you wanted to. If you're raising $5 million from retail investors, but you needed $10 million, it's very common for people to go ahead and use Reg D for $5 million of it from accredited investors and Reg CF for $5 million of it from retail investors. And in that way, you can create a global offering through Reg S and Reg D or Reg CF or Reg A in order to basically open yourself to just about anybody in the entire world to invest in your business.
Very exciting stuff. The one other important thing to note about Reg S is that it is important that you follow all local jurisdictions of where the investors are coming from. So while the US itself doesn't necessarily care about how stringently you follow those laws, it's a little bit more hands-off than opposed to Reg D or CF or A+. It is important that there are a lot of rules and regulations from each individual jurisdiction that you raise from. Remember our example from earlier about Poloniex working with Canadian investors. It's the same kind of thing here. You do need to be careful and follow all local regulations to make sure that these things are moving forward in a way that's acceptable for that specific jurisdiction. But yeah, you can raise them all together, be really successful that way, and that's kind of the whole landscape for how to raise money with a security token.
That's absolutely right, Kyle. I think that's a good overview, but as we said earlier in the segment here, that's why we are not attorneys, and the most important thing you can do is find yourself some good securities counsel to review everything we just discussed today here with them. And with that, we hope that you'll catch us again next week on Friday. We've moved to Fridays for those of you who are new to the show or returning to the show. And for those of you who are new, you should know that every week on Thursday, we do a clubhouse session with other guests from the industry where you can participate. We break down the show and we talk about everything that we discussed here on the main topic. And of course, you can find all the latest trading information, news at stomarket.com, the stomarket.com blog for research reports and information. And of course, check out the What's Drippin' newsletter to get all the information on a weekly basis in a nice digestible email format.
Thanks so much for listening. Really looking forward to talking to you next week. Tune into the Clubhouse, ask some Q&A, or reach out to either of us, LinkedIn, Twitter, anywhere you want to find us. Drop a comment below. We'll talk to you next week.
Happy tokenizing.